will be hit by NFP. I thank everybody for being here, and I hope great setups. And let's go about doing the business. Just one thing, as I told you before, also I carry a very unorthodox style of charting, so it won't be the same thing that you have gone through or probably have seen it before. Nevertheless, it's effective, and let's go digging some pairs. Everybody's favorite, euro. So we'll start off with the euro, and I want to share my 4-hour chart. Simple as that. Uh, there was actually, we did it in the last time also. I'm looking something like this on the euro. This is a one trend line that I've drawn, and I've been basing a few trades based on that. I do understand the concept of some break, on the higher side and price grooving before coming down again, and then eventually lower. The whole idea is that I'm ignoring this to patch up on the higher side, and I still consider that this is one of the top possible top ranges. So in effect with that, I was looking in to go short somewhere close to it. Eventually it came in, and I will discuss a bit more in comparison with the US dollar, how this trade came into being, and what were the factors that we were looking in. Nothing to do too much about fundamentals are here, keeping it pure technicals, and NFP being the number game and can carry huge swings to either side of the price action, but eventually it comes down to the trend line, and you can pretty much decipher, get yourself a pretty good idea on what you need to do or how things to be done. Now, coming down to this 4-hour charts, and I'm just using one simple trend line here, and this has been in place for quite a few days. Eventually, when we broke up and expected targets. Anyways, coming down to the point, this is a trend line which pretty much is breaking up on the price curve on the higher side. So while dollar looks strong, euro looks weak, not till we get a close underneath towards here. That's roughly about under today's low, about 1179. So let's say about give or take few pips, as long as we're not closing any significant 2 hours or 4-hour candle under 1170, there's a higher potential that euro can still muster one more spot on the higher side and probably go and make an impact on 1400 or close to around here. And my fair guess, as to what I've seen over the past, I've been seeing for the last 12, 14 years, and all my analysis is pretty much based on my experience on how I've seen the market and how I try to depict that via my trend line. We get a bounce out here. Let's say an NFE number comes in, regardless of the numbers. We get a spike down here, and we start getting a lift off. If the lift off happens, as in case of we are not closing under here, I would expect price to come down and hit close to around 1400 level, and that would be prime spot to go sell on Euro USD. And in case if we're breaking down and closing down under to here, I would expect price to come down and eventually make a landslide towards 1.10 plus minus few pips. And what you were seeing here earlier, it's nothing more than previous price been boxed in between these two channels. It was a bull channel till the Greece news start coming in, and we had a strong reaction. Normally when you see a bull channel and or a bear channel for that matter, and the price it takes off and basically breaks off and starts staying higher, done one retest. I've discussed in my previous webinar also that most of the people, they prefer to buy on the break. A true breakout strategy, you need the break to carry on a good volume, make a significant, in this case, since it was a bull channel, we broke on the higher side, a significant high, and then come back retest. It's all about the retest. Retest held, got a bounce up, you start buying. That on a classic breakout play, you tend to get a new higher than this high, and then of course you can plot your trend lines, go around, and you can figure out potential targets. Anyways, that been done and said, we're coming back, and all I did was try to figure out when the price was breaking down where it might just break in, and this was a good channel to consider, and broke in, came back, retested, failing, and then giving me a hint that of course it'd been in an NFP, and then in case we do not make it all the way back up to, I mean, or put it this way, for us to make it back towards 1400 or close to it, it needs to take out this trend line. So uh, on a any normal day, let's say there wasn't a high impact news or something like NFP today, any retest, or in terms of here, any higher point towards 1175, 78 has in 1280, 85, I would highly prefer to go short and I'll look for a tandem target towards this trend line, which is about, I would say, about 1140-ish. So that would be my target. That would be my play. Uh, if I am highly turning down towards bearish view on the euro, I might consider this as a head. This zone has a left shoulder, ignore the spike, and probably right shoulder towards here. I still would prefer anything, a spike higher towards 1180, sorry, 1280-ish as an entry point, and try to take it down here. And my ultimate risk would be, if I'm lavish on my stop loss, would place somewhere around above 1410. But I'm a kind of a trader who does not like too much of a stop loss, so maybe few pips on top of that, I'll try to hide my stops and see an impact here, and then get back on the short side if this thing is holding. All right, so this is just a glimpse of when you got the trend lines in, then how do you play around. And how do you play around is that once you have laid the setup in, you do nothing beside wait for price to come and hit your marks, and then go around doing things, and carry it carry it down a little bit on the higher side. I will go on with, this is another 8 hour, sorry, I'll do a daily one. That's the one I want to show. And we what we have here, minus the noise, is only two trend lines forming up a bear flag. Basically, this is a bear flag. That's mean in case if we do end up getting higher than 1400, I would expect price to, my thoughts would be 1510, 1520 would be doable. So that would become my next projection in terms of closing higher above 1410, 1415. I'll look for another 100 pips higher side on the euro, and that would become my next. Actually, this would be very ideal spot to go short, 1510, 1520, around that range. If it comes to it, first of all, you're getting a minor new high towards the previous one that was posted a couple of weeks back. And if it holds on here, then I would be more certain that this is a bear flag. So even a minor retrace would be at least about, let's say, about 50%, will get us somewhere around to 1.11, something like that. So that's pretty healthy trade setup out here. Of course, the price needs to close above 1400, 1405 for that to come into limelight. And with NFP, it is quite possible. Another thing that I want to share is, sorry, it's a dollar chart. I've done this before. I've commented. There's a lot of posting that was done on that. All right, let me take this out so that there's less confusion. And all I want you to consider is that this is a head, this is a possible left shoulder, uh, premature right shoulder. This was a previous price breaker, shifting price on the lower side or shifting price on the higher side. Ultimately came in being a neckline. And when we broken, we had a target base out here that was done, and I was expecting a rejection, but nothing as strong as the one that we saw it. But eventually, here is a retest. So even if this is not a inverse head and shoulder, even if this is not a neckline break, consider this as a pure breakout, made a significant high, came back, retest, and a bouncing. So that's mean a classic breakout. You need to make another impact back to testing T5. That makes USD bullish. That makes higher. That this is one of the clauses. What tells me that over the NFP I can leave some interest towards of course nothing on a bigger volume. Maybe something that's acceptable to me in terms of losses. Maybe half size or even lower than that. Because even on the NFP we do have spreads widening up to uh, stupid levels. So I can leave an entry for 1280, 80, 85 and take a chance out there based on that, this is to go higher. And if I want to break it down furthermore, I will come around with this thing, which is basically I have a 2 hours. Again, I consider this as a head series of left shoulder, maybe a tad higher here, then I drop down here to form a right shoulder around to this zone and then take off. So that gives you an impact that if I just consider the dollar chart here on the 2 hours, it gives me an impression that there will be up and down swings on the dollar. That's mean we might not do too much today, but just carry on onto a range, and that would probably be because dollar swinging on the higher side, then dropping into the lower side, and then bouncing, putting in a confirmed right shoulder and then bouncing back up and probably breaking the neck somewhere around here. So that gives you impression that, maybe we'll just get a knee-jerk reaction for 5, 10, 15, 20 minutes, and then, the real deal might just come in on Monday when probably starts breaking on the higher side and start carrying up. Eventually, at the same time, uh, this is also important is that in case, depending on the numbers and how the market reacts, we end up closing on the lower side, breaking and closing on the breaking and closing under to this trend line out here. I would expect pretty much a meltdown situation on a dollar. That's been dollar will it will be very difficult to sit on a dollar buying out from here because the markets, whatever they do, they don't like a rejection, and this would be a rejection. So uh, probability clause higher. Maybe a swing down here, putting down on a right shoulder, that's acceptable. But all the way down here or close under, that would be trouble times for dollar, big time trouble times. And I think much more clear head, left, right, break, retest. Of course, daily the levels don't exactly match with the other time frames eventually, but the same concept. No close under, trying to bounce back, and then take out this peak, and then could be the third. And this is a trend line that we were following, broken higher. That was one of our trades for the day, and of course did not sit around for the whole target. It'd been an NFP, and was considering probably we're just going to groove around here and probably on the NFP one more spike high here and then come down eventually. But if I have to mark down the target on the break, my closest target probably going to come something like this. Actually, hold on, something. Yeah, actually, I would do this. Yeah. So, and when you see a trend line, at least when I see a trend line like this, you know, it took 1 point, got a connection here, and shown a good bounce. If it comes down, back to it, pretty much 45, 20, whatever, 22, 23, 24, this is a point of connection. I mean, if this wasn't an NFP, I would be its definite buyer on towards this trend line, and I would know that I have a higher probability that we're gonna break. This was a false break here. We're gonna break back above, and we'll continue all the way back here. Probably, end up matching the highs. So it's been a cross pair. I will not be putting my eggs into this basket, but on a normal day, uh, this is where I can bet. This is where I can bet. I would bet on these trend lines, and as soon as it starts closing on the higher side, I will look to add. And I know I just need to be patient. I'm getting a swing back to this highs. So these are very easy setups. These are very powerful setup. Most of the people, they tend to ignore it. I mean, I understand the concept of breakout, but then how many times you've seen, especially on the crossover, when we get a breakout, prices are actually moving back on the higher side. And the reason is that you have I call them usual suspects, because they, on a normal lookout, does not mean too much, does not show too much strength, except being, just a declining support. But the things that they can do, especially when you have one touch and, you're coming down on a third test, the things that they can do, this is one of the most profitable setups that, I can consider. And the only hint you require is, move back on the higher side and then sit back and relax, and you're gonna get yourself hit out on a target here and then sell back here for probably about 50-60% of the retrace from here to here. So I would say 60-10, if you get a sell back off from here, 46-10, 46-15 again would be gettable. And something in tandem with that, we had another trade on the same concept that was on the Euro Japanese, and it's again a simple layout, not as effective as it was on the Euro Odd. But here's the concept that we had a bull flag break, we spotted this, price went in, price has not yet come down here. So uh, this is a trend line which attracts me, and we were actually waiting for this trend line, and this was the entry to go in short. And well, the target was to here, but it's nowhere close to it. But apparently it's mostly due to the fact that dollar yen is doing nothing at all. But my guess right now is, on a normal day, I would be, since we haven't done a deeper retrace, I definitely would have sold next high, minor high to here, anywhere close to 140.98, 141 zone. I'm a definite seller. If this was, even if this is okay, even this is an NFP, I would not mind throwing in a small order into 140.90-ish, and looking down, at least for beginning, at least looking down for a newer low than from wherever it's going to pick up. That would be my target. And unless I can project some, and if I have to, yeah, yeah. My fair guess on Euro Japanese range play for NFP is get a shot into 140.90-ish, close to 141, and headed down towards around 139.45. So this setup here, the euro out there, is telling me that euro is probably gonna it probably be more on the defensive side. So it's not the pair that you know uh, that can show some strength, at least looking at the crossplay. And unless any Greek news comes in, that's a different story. And we go looking at the pound. We got 2 more minutes for the NFP. Yeah, I was looking in, buy zone here, and this is pretty easy. Pound dollar is pretty easy. It's just that, on the number 54.5, 54.10, spike towards here, sell it. When I say spike, that's mean you have an entry left on to grab a position, on the spike, and I just want the price to come in on the spike. I don't want spikes down here, and then starts coming back in. Then there's chances that it's just gonna break it. But a spike means whoop, in, down. So I take this out and I just leave these two marks here. I see a bear flag. So that makes, it tells me this was a false breakout on the higher side, short-lived. So this is still a good trend line, and we are on. So down target or the bear flag base has been done, and if it's breaking in, then we're going deeper, and are we going deeper? And how is euro doing? Done the mark. So right now, what we are looking for is a close under. It closes under, then your next target becomes easily defined back to 1.10, which is on the bigger time frames also. And what smaller time frame is doing is just that, probably helping you out with the clause that, you're probably going to hit somewhere here, then it's going to bounce back, try to bounce back here, starts holding down towards this zone, then you have a short play for between here and here. And I want to see quickly how dollar is doing. Okay. Dollar wants to tell me that this is a head, this is a left shoulder, premature right shoulder, and it's in a hurry to go back on the higher side. Now it does. As I said, euro looks pressure, and that's one way to see is why the crosses and how is euro doing. It's taken down. It is taking down. So 44.75. That would be my next area. That's mean dollar yen is breaking out of the range too. Yeah, it's been boxing for a while, and well, it should do 126, close to 126 or 126.10. Probably gonna, we'll try. What it seems like, it's probably gonna try to hold on here, maybe swing back, from 126 zone, or swing back on the on towards here. And I want to quickly see how. Yeah, this was my layout on the S&P. Waiting an impact out here, and that's been most likely 1660 on the gold has been done also. Yeah, I'm looking for gold to make somewhere around to us 15, sorry, 1558, 15, sorry, 60, 1560 zone. And all right, CAD. Well, the numbers are in, and since we're looking at a here in a 4-hour candle, so apparently, you know, it's been hitting it, it's been trying to break it. Now we have to wait for the candles, to, whatever the time frame that we're watching, we have to wait for the time for the candles to close and see where the close is to determine the next direction for that matter. So far, it's been piercing and it's been trying to hold on to here. I would assume something similar is getting done on euro, probably. He's already trying to hit 1.10. That would be for today's. Well, even if it's an NFP, it's still a tribal point for a long side. Anything close to 1.1090ish to 1.11. If it holds, you gotta possible play of 50, 60 pips on the higher side, then most likely either it breaks on the higher side or come down. But more formation of head left, probably a neckline. So I would assume, you know, this zone will at least try to give it a fight. So uh, I still haven't. I'm with you. I still haven't seen the numbers yet. But my guess is that, what I've seen over and over again, regardless of heavy news, this will probably going to try to hold in for a while. So you probably have a muster of about 40, 50, 60 pips, at least a try back towards 1175, 80. So a small stop, maybe 15, 20 pips down from here, lower up on the volume, and this is a triable zone from here. And same thing, same thing. Maybe I might be a little bit off on the euro, but these are the points where, same thing, sell here. If this is coming down as a bear flag to me, then your buy points are here. But had this spike would have been, all the way here, that would have been, this is what we were looking for, to get a spike on the higher side and then sell it down, uh, see a break here and sell it down till here. I mean, no use. I mean, if you are a long-term player, here I'm being an intraday player, touchdown here, I'm out. I'm not greedy, I'm not waiting for anything, but just what we do is we play from range to range, unless we have a concept that, or a strong feeling that, it's going to eventually break down, something that, we try to bank as much as we can and leave a small portion on, and even to an extent that, if it comes back here retesting it, we sell back towards here. So these are just concept, and these are just the way that we trade in. Break here would be it's surely like to go some distance, because I'm at the present treating it as a bear flag. So I wanted to cover more pair, but I think most of the time was taken up on the dollar and euro itself. And Canadian is working counter trend on the NFP compared to the others. So Euro CAD and Pound CAD probably would be, yeah, would expect. I had an eye on this normal day break, would consider to sell it because this has gone miles and miles and leaps and leaps. It needs to come down towards 37.30ish. So anyways, comes down here for the day, close to it. I mean 37.20, 37.30. That would be my buy point towards on this pair, and at least cover back towards 38 zone. So smaller setup, and yeah, most likely towards here, 37.20, 30ish. Simple. To me, this is a breakout. If I take that out, that was you know that's an initial projection, but the idea is that if it breaks under, it needs to continue down here. From here, there has to be a swing back here. Then maybe a back here, and then either it breaks back up and you buy for newer high, or breaks back under, telling you that the temporary top is in. So Euro Canadian, while it looks so messed up on the charts, but if you try to break it down into other smaller time frame, it becomes easier. All you have to do is mark one concrete trend line and base the trades based on that. So here would be 38, 20-ish has a mark where it can, reject the price. My guess is that it should break it, come down all the way till 37.15 to 25 range, get a buy back towards 38, 35, 38, 40, swing back, and then, waiting for either break on the higher side to buy back for a new high, or break under, and then, whatever target that you have in place. And I'll see if I have something here on it. Well, it shows pretty down. It shows pretty down. It seems like it might just get angry. This is, you know, it surely has to be done a lot of stuff. Most likely, yeah. 37 year, definitely a buy. 37.19, 37.15, 25, definitely a buy. So my guess is that this is coming down here and swing back probably about 80, 100, 110 pips, and then next breakout as I shown you out there. I want to see again how gold is going on. This is dollar pound. Basically, it shows a bullishness. It shows that it can probably go and do here, but as of right now, it needs to close a trend line above, I would say 73, 60, 65 before you can start looking in from here. So basically, this is the point where you can try telling yourself that, the lately Euro Pound is doing a marvelous job in finding out which is the stronger or which is a weaker pair among Euro USD and Pound USD, and how it helps us is basically we look at Euro Pound off the resistance. We're expecting it down, so we're expecting pound to behave better than euro. And then euro, as I showed you earlier, between euro AUD and euro Japanese, it just gives you a hint that, if you're looking into buying to any USD pair, euro should not be the one that you should consider for the day. Might come down on a very prime spot, you can consider it, but do not go with a lot of hope that, other majors are doing maybe 70, 80 or 100 pips. You might just do about 20, 30 pips, and the reason be it's getting beaten up on the crosses. I would expect it to come down here, and the whole idea is that when you're looking at crosses and when you're looking at some prime levels like EuroCAD, Euro Japanese, or most of them will line up at the same time, and that gives you a fair guess, a fair hint that from here you have a likely retrace coming in, on all those pairs. So it's a good idea. Euro pound, I would say probably I trade once or twice in the whole year, but it's a gauge that I look for, especially because most of our trades are that it goes into cross pairs, and if I'm pinning pound against any other cross, or if I'm pinning euro against any other cross, buying or selling, this tells me for the day I should be looking to buy pound out, or should I be looking to buy euro on. So this is just a barometer, a gauge that we use. Uh, Coming down to as I was telling you earlier, that would be my preferred target. It was looking uncertain at that time before the NFP, and I was actually hoping it strike back up here, because we actually had the orders to go in short from here for this target, but eventually, but I would expect it to come down to 139. Uh, Most likely it's going to show a little bit buy interest from 139 back towards not a big range, but I'll try to show some kind of buy interest. On a normal day, these are the things that I don't have to worry too much. All I have to worry about, do I need to put a 15 pip stop loss or a 20 pip stop loss, or is it coming down to the point where I can go, half size, full size, time and a half, two. These are things that I need to consider. I won't. I would not be bothered too much about coming down and slipping right under to it on a normal occasion. So yeah, I would expect some some fight back or around towards here. Here, let's do pound yen. Pound yen is a bit on a tricky side. Looks like it wants to get top off here, and but it's got a lot of cushion. It's got a lot of cushion to actually make an impact to 192.60 all the way to 193. So eventually, this is one trade setup that we are waiting for. Uh, you waiting in for actually to go and make a move higher, because here it becomes very simple. It's okay. Let me share in a secret. Uh, when you see something like that, you have a previous trend line that is going in one direction, then you have a trend that slowed down, and then you still have something concurrent overs in terms of since this has been a bullish trend line, if I sketch it, it'll come out bullish, but then it was showing more of a stronger move. Inclination is you know compared to this dotted one, it's deeper. So how you play that is that you initially you can try off from here, but what you're actually waiting for is price to shoot on the higher side and hit back out here. This is where you can enter a trade, and that how would you know if you can gun all the way down here? Thing is that when it breaks on the higher side, hits here, it gives you a shot. It shows you it wants to come back. It starts holding to this point, so it will groove back, swing back, hit back again, and you should look for a minor new high. You should not look for that. I'll place my stop on a even, and I hope that it's going to break down. But what you should be doing is you should be looking to bank 60, 70, 80% out here, leave a small portion remaining, with the view that if I get if I'm looking at 4 hours, if I get a 4 hour candle close underneath, what I should do is get a retest back to it. I should add back to the same direction. Otherwise, you bank most of your pips. You left a small runners in case if it, don't want to swing back and just want to go down. So, but mostly, it comes back up, hits you a minor new high, you should add back to it. And you would know, because then this trend line will start holding. It's probably going to do a couple of times like that. All you do is, you need to be banking, adding, banking till it breaks under. When it breaks under, then you can consider that, one of the temporary top. Let's say if this is more bullish, it's going towards 200 plus or 300 plus, whatever. If it's more bullish, then at least, for next 3 weeks or 4 weeks, you probably have a temporary top coming, or it's in place. So with that in view, you have got some top position already on hand. You can start playing it and adding on, revisit to this trend line till it breaks under, then, you repeat the same structure. And rarely do you get, on a cross especially, rarely do you get that, unless one of the major USD pair, really falls out, or really, starts surging, and then, you get straight, or down, straight down, down, down. Otherwise, it's always a swing out. It's always a swing out. A good example is here in pound NZD, too steep, you know, showing you a wedge, give you an entry here, swing back here, swing back here, and of course, with those peaks, you can a little bit alter your trend line, maybe something like that. So mostly, if it breaks, normally if you look at it, it needs to break on the lower side, but consider that if it breaks on the higher side, when it starts breaking on the higher side, best thing you can do is, if you cannot buy, then don't sell and let it go wherever it wants to go. It wants to go here, 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 let it go. Just wait for the impact for it to close back under. That's it. Once it starts closing back under, hit it, hit the sell. Unless you have got some definite, other trend lines or other targets or other zone where you can sell from, that's good enough. Otherwise, if you don't, then, don't start chasing these kind of markets, because when they break, showing you a probability pattern where it needs to break on the lower side, where it breaks on the higher side, then your best, you know, gesture is that don't get involved with those peers. Wait for them to get back into whatever you had, and then once they're back, then start hitting them, and that's a time when they actually will show you the moves. And these are something that I see again and again, again and again, again and again, and it's a cycle of repetition, and that's how you need to look into it. When you're defining trend lines, all you're doing is boxing in the price to probability clause, where that these are the ranges, and then when the price is in between, you should do nothing. unless you're bored, then I think, and you still want to trade, that would be gambling, then you're better off in a casino. But waiting for your marks, and when the marks comes in, just execute those trade plans. It's simple as that. I understand, higher news impact data, NFP, GDP, uh, you know, Draghi, ECB, or other Bank of England, Bank of Canada, that could be messy up. But then apparently, even on those trades, if how to hide your orders, to some premium point, all you need to do is first 5 6 minutes. If you get a spike to those levels and they get trigger in, good enough. Otherwise, take them out, because if they come back after 1 hour, 2 hours, then the chances are they're going to break it, because the flow is not against, let's say if I want to sell a pair from XYZ, if it's not, on an NFP, and if it's not coming up in the first 5 10 minutes, I need to take it out, because it probably has gone down to my target and it's coming back from my target towards the range where I want to sell it from or I want to buy it from. Now the chances are there that, that whole move is already done, and that move ended up being a fake. So the real move is on the way, and that's been my order will get picked in, and I'm most likely to be stopped out. So refrain from, these are the tactics, these are the things that I've learned over the years, and I employ them. Uh, Unlike my previous webinar where I basically explained most of the trend lines, why I was picking, why I was doing certain things. Here I wanted to take you down more on the setups, and well, did not realize that euro and dollar took up much of the time, but apparently the whole concept is that uh, at least when you're doing a trend line analysis, you're doing nothing more than trying to go for a higher probability of where the price is going to go in. Uh, excuse me, whether you're a buyer or whether you are a seller, you need to have certain points, and those certain points means, uh, like for us, what it means is that, if I want to, let's say, if I want to sell, let's say I want to sell Euro Japanese right here, and I think it's going to come down for 137 or 137.50. I want to sell here, but where would my stop be? My stop still needs to be higher than this trend line, because eventually, not till we are closing under here, we can swing back to here. So my ideal position would still be over here, but if I sell here, I have a very wide stop loss, probably about, I don't know, maybe almost 100 pips, 70, 80 pips, 90 pips, 100 pips. So that becomes less attractive of a trade setup, because I would not mind, for all I know, it just dips the next 5 10 minutes, it just dips and it hits down here. I would not mind not taking those pips, but I would do mind if I take a position here and swings back and come back to my premium point where I wanted to get in. Then basically from here to here, the profit that I would have taken on this trade, I have let it gone wasted. That's been uh, it's not worth it to me. I can take another position wasted. That's been uh, it's not worth it to me. I can take another position out here, but that would be doubling up my losses in case if it just breaks out. And if it breaks out, it's not just going to break out. It's not going to give me any time to think or do anything. Most likely, when these kind of break out, when they do it, it's just going to go. It's just going to go out of zoom. It'll be a huge 30-minute candle out there. So things that I've seen over the years again and again and again and again, it helps you out, how to position yourself or how not to go in on a trade. And at times we have orders into the market and we get missed out by, execution get mixed out by 1 or 2 pips. And next thing we know, on the same day, they are doing like 150, 170 pips, but we got nothing out of it because we were disciplined and we were confined with our 22 pip stop loss, and we did not want it at 22 pips to go 25 pip because that's not the calculation that we have done on the other hand. So longer run, it helps us. And yeah, that would be my buys would be initiated here. Look for I'll look for closes, 5 6 minutes to the close of the candle. Closes on the higher side, I can maybe lower my stop loss a few more pips down from here. I'm waiting for an impact like that. But as stated, with the euro looking weaker on the crosses, I would not opted for that. Even if I would have gone in, probably wouldn't for a scalp. That's mean I probably would have been already out. Uh, Pound would have been better choice, and it shows actually here also. It shows comparing did not breach through too much. Probably has done like 20, 30 and probably have come down. I don't know how much. I haven't been watching. Yeah, it's done, I mean, consider this even on an NFP, if you do it correctly, you'll still be, you don't need lavish stop losses, but you need a smart entry points or smart exit points, you know, 50 to 25 entry, probably 52, 60, 35, 40 pips within a matter of 5, 10, 15 minutes. At least I don't say no to that. And I want to see one more time. S&P, is it holding or is it crashing down underneath? Again, this is the channel. You're only working down the channel, nothing else. It's all about channels. Actually, the whole channel analysis, if you're doing it correctly, it's not about you trying to find out support and resistance. For me, it's never about support and resistance. For me, it's all about patterns. It's all about channels. If I have it, regardless of any channel, within a channel, you need to have a support, you need to have a resistance. That what ends up making it a channel, whether it's a bear channel, whether it's a bull channel, whether it's a pennant, or whether it's a triangle, flags, whatever you're considering. Because even for bull flag, you need to have a top, you need to have a base. Even for a bear flag, the same thing. For a bullet, you need to have a top, you need to have a base for that. And what I prefer to do is whenever I have a channel, I try to kick in something in between that becomes the medium. That's mean something that I can, look for, let's say if it's a 300, 400 pips channel, regardless of bear or bull, I'll try to throw in a trend line from where I know from here the next 100, 150 points will be on the higher side within the channel, or would it be on the lower side within the channel? So that helps you, you being an intraday player, it helps you set up on the entries. And what do you call that? It's all about, as I say, it's all about smart entries. You enter here, yeah, normal stop loss for a S&P would be like $3, $4, maybe $5, $6 for the NFP, because you don't want to get jerked out by the spreads and all, but taking down $6 $7 out of it on an S&P, it's not bad. Not especially, it's not bad for 5 10 minutes workout. And year cat probably, yeah, it's trying to hold on here, but this definitely would have been a better entry. And actually, a good entry, as I told you, the reason is that the swing from here to here is it's roughly about 100, 110 pips, so that makes it attractive. Put down 25, 30 pips stop loss and run down for 80, 90 pips. Aggressive probably can look for a buy. That's mean you have a view that, it's going on the higher side, but I would rather wait it for down here and then, get a swing back here and then, get out and then wait for a breakout here or here. And I think pretty much the session is over. I hope it was informative, and anybody who likes to have a question in place, I'll try to answer back. Anybody has got any question? Dollar, What if I have that? So basically here I was looking one failure here, a deeper retraction here to put in a proper right channel and then lift off. But well, it's it's doing its thing. Again, let me take some time and repeat the same thing again. The actual breakouts, this is a good one. It actually did a minor one, retested. It'd been a neckline, of course, buy, but this is another good deal. Came back, retest, and done a full retest, and hit back on the buy side. So uh, I would expect to move back here, and in conjunction with that, uh, you have euro, you have pound, most likely everything on the lower side. So it would have been nicer if we would have gotten peak IR here and then a drop, but eventually this candle itself was indicating a lot of things, and well, the rest is the rest is very apparent. And all right. So as said, now they probably gonna be. I think they're gonna break out. If not today, then by tomorrow they're gonna break out. But it'll be nice to swing back here and try to get a premium point entry out from here. But apparently, you know, you don't always get what you're looking for. But it'd be nice. Regardless of that, if you were sitting here, NFP and everything, considering everything, you take what you can, or at least if you wanna still be maintaining position, at least bank some, lower or amend your stops, and then try to weather out the storm. But dollar should continue on. It should continue on here eventually. So if anybody has got any question, I would like to, I would take it. Otherwise, I think I'm pretty much done. Anyone? Do let us know about your feedback. Uh, I do feel today it was a bit of a rush out, especially I did not intend to take too much time on the euro and dollar. I wanted to cover a few more here and then see the impact on the news. But the whole idea is that regardless of what strategy that you apply, they have to have a system base to it in terms of what do you call that strategy. Trend line analysis tells you have no bias. Whatever trend line that you have drawn in those lines, react, base your trades on those lines, regardless of how I feel, or regardless of what I wanted to play around. Do what you see, and what you're seeing is the thing that you're drawing yourself, you're charting yourself. Then no need to go against them. Simon, yeah, essentially I'm buying and selling between my trend line. Not in between. I try to, if I'm selling, depending on the time frame that I have, this is a trend line I'm here. So if I'm getting a reading, let's say for it's saying T2 at 1511. So 1511 means plus minus 5-6 pips for me. Since it's a daily, I might do a plus minus plus minus 7-8 pips. So that's mean I can enter 1502, 1503, and with a view that I can do as much as 1520, 25. So I'll try to hide my stop losses above 1540. So something very close or as close as I can get to this trend line, that's my entries are. So mostly what we do is we place in orders. We hardly execute manually. So orders will be placed down here. Like say yesterday, uh, we 1391 was here. We had an order for, sorry, 1391 is a marking. We had an order to go short 1391, and we came short about 10 11 pips. But that was fine because most of our work yesterday was on the euro, so that works out, and we were on the long side. And but the whole idea is that something here with a stop loss of 1417, you need to get a price as close to your thing, and that's what makes a difference. Instead of me getting into 1300 and bearing the potential drawdown towards 1390 or 90 pips, try to get in something close to here. If I miss an entry, that's okay. I miss a lot of entries. Out of every 10 trades, you know 2 to 3 trades I'll miss it, but I know, the longer run is that it's good for me. So if it works, then you know why try to fix it? And the sole reason for you to draw your trend line is simple. Is to, you know, take this as an example. You have one peak, second peak down here, short term breakout, retest, and we're talking about intraday trade setups here. I'm not talking about longer term projection, or I'm not onto the dailies, or I'm not into the weeklies, or holding down for days and weeks. If I'm to hold on for days and weeks, and if I get an entry out here, I will definitely try to try to take it down even lower, because uh, if I come back onto daily and with an assumption that this is still a bear flag, that's mean I will look for an impact somewhere to 106.40, 50 and see if it's breaking or not. If I'm getting a bounce up, then I know the price can go back to 110, 111. So I would try to cover around here. But being an intraday player, and the way we do is we carry on with the profit trade, 30, 40 pips, banks, portion out of it, amend your stops, and try to forget about the trade and go on to the next setup. Because if you're doing it on an intraday basis, you cannot be relying on one single pair. It has to be a various pair, and has to be on a various time frames, and you try to get a couple of trades getting in, and hit your marks, and try to stay profitable every day, and that's what we try to do basically.